Kusuzangpo and warm greetings to all Class 12 economics students. In this video lesson, I am going to present on solutions of numerical problems from calculation of national income accounting. There are three commonly used methods for calculating national income, and they are product method, income method, and expenditure method. In the previous video lessons, we have clearly introduced you the methods, procedure, and the components of national income calculation in all these three methods. So in this lesson, we are going to quickly solve a numerical problem for each method. So here we have to calculate the national income by using the product method. So when it comes to the calculation of national income by using the different methods, the first thing is we should be able to identify the components. So let us go to the solution part. First step, what we do is we add the values of final goods and services produced by all the sectors in an economy. For instance, in our question, in the first component, they had given us the value of output produced by the primary sector, which is equivalent to Newton, 200, value of output produced by the secondary sector, value of output produced by the tertiary sector. So these three will give us the value of final output produced by the different sectors in an economy. So therefore, the total value added or total value of final goods and services produced by three sectors in an economy is 750. And very important, another step of calculation of national income by product method is we have to deduct the value of intermediate goods. And the reason why we have to deduct the value of intermediate goods is in order to avoid the double counting. So if we include the value of final goods as well as the value of intermediate goods, then it will lead to a double counting. So therefore, a very important next step, the second step in calculation of national income by using the product method is we have to deduct the value of intermediate goods. Value of intermediate goods in each sector. So the total value of intermediate goods used in these three sectors are sum of used in primary sector is 50, 60 plus another 60. So the total value of intermediate goods used in this three sector is 170. So therefore, yes, after deducting the value of intermediate goods used in three sector, our answer is 580. That is 750 minus 170. So this 570 will give us the gross domestic product at market price. Value of final goods and services produced at the market price within the domestic economy. So this will give us the gross domestic product at market price. Now from here we have to convert this gross to net. So how do we convert the gross to net? To convert the gross income to net income, we have to deduct the depreciation. So they will also give us the depreciation value. So when it comes to the depreciation, sometimes they use consumption of fixed capital instead of depreciation. So consumption of fixed capital and depreciations are same. So here the depreciation rate is 20. So we'll have to deduct the depreciation from the gross income to reach to the net income. So therefore, yes, after deduction of the depreciation from the gross income, we get the net domestic product at market price. And in the next step, what we'll have to do is we have to convert this market price to the factor cost. So how do we convert the market price to a factor cost? To convert the market price to factor cost, we have to deduct net indirect taxes. Net indirect taxes. So what is the value of net indirect taxes in our question? It's 25. So if you deduct the net indirect taxes from the market price, we get now our final answer is net domestic product at factor cost. So this is our domestic income. Net domestic product at factor cost gives us the domestic income. Now in our question, we are asked to find out the national income. So we had one more step. So because we have to convert this domestic income into national income. So what has to be added to derive the domestic income to the national income? To derive the domestic income to the national income, we have to add net factor income earned from abroad. And how do we get the net income earned from abroad? Net income earned from abroad, we get it from income received from the rest of world minus income occurring to the rest of the world. So here, since they had given directly the net factor income earned from abroad, which is negative, it is negative because the income that we are actually paying to the rest of the world is greater than what we are receiving. So therefore it's negative figure. So therefore what we have to do is, actually it has to be added. So since the figure is negative, we have to deduct the net factor income earned from abroad. So therefore finally we had reached to the national income. So net national product at factor cost. Technically national income is written as net national product at factor cost. So therefore see, we have deducted the net factor income earned from abroad from the domestic income. So therefore it is derived, it is now we had a national income. So therefore the national income is 520. So this is how we calculate the national income by using the product method. Okay, here we had another question where we have to calculate the national income by using the income method. So when we calculate the national income by income method, we actually add all the incomes generated by the factors of production in an economy. So therefore there are three components here. The first one is compensation of employees, which actually includes all the income earned by the laborers by providing their labor services such as wages, salaries, bonus, commissions. And the second one is operating surplus, which actually includes the income earned by property owners such as rent, interest, and royalties, whereas income earned by the entrepreneur can be broken down into corporate tax, dividends, and undistributed profit. So when we use this method to calculate the national income, the first thing is we have to identify the three main items here. What are they? The first one is compensation of employees, which is equals to 22,000. The next one is operating surplus, which is equals to 15,000. And the last item here is mixed income. Mixed income is actually earned by the individuals who provides both the labor services as well as capital services. So mixed income, the value of mixed income is 25,000. So when we add the income generated by these factors, we get net domestic product at factor cost. Okay, here we directly get the domestic product. Okay, when we actually calculate the national income by using the income method, we directly get the domestic product. So okay, we are left with one step. That is, we have to convert this domestic income to national income. So what is national income? We have to reach to net national product at factor cost. So it's already net, it's already at factor cost. Only the thing is we have to convert the domestic product to national product. So how do we reach to national income from domestic income? Just by adding the net factor income earned from abroad. So here, yes, what is the value of net factor income earned from abroad? It's 1,000. Negative 1,000, which means the income received from rest of the world by our country is less than income that we are actually paying to the rest of the world. So therefore the difference has become negative. So therefore, yes, our national income here is 61,000. So this is how we calculate the national income by using the income method. When we calculate the national income by using the expenditure method, we have to add the expenses incurred by the different sectors in an economy on different purposes. For example, the first component here is private final consumption expenditure. Private final consumption expenditure is given here. The second component is investment expenditure. So when it comes to the investment expenditure, sometimes they will directly give it as investment expenditure, but sometimes rather they will give it in the form of fixed capital formation or net domestic capital formation. And the next adjustment is government expenditure. Government final consumption expenditure is given here. And lastly, here we have 4 adjustment. The fourth one is net export. So here we get net export, we get it by subtracting the value of imports from value of export. Yes, what we'll have to do, we'll have to identify 4 components. The first one is private final consumption expenditure. What is the value of private final consumption expenditure? 200. The second one is, instead of investment expenditure, they had given it as net domestic capital formation, which is equals to 75. The third one is government final consumption expenditure, and the last one is net export. So again here net export is negative, which means the value of the amount of money that we receive from our export is less than the value of money that we actually pay for the import. So that's why it's negative, so it has to be deducted. So therefore 200 plus 75 plus 50 minus 25 is 300. So this will give us the net domestic product at market price. Now here, why we get in net? Because when it comes to the investment expenditure, they had given in net, so you can write it as directly as net. In case if it is given as the investment expenditure, then it has to be in gross. Or in case if it is given in other fixed capital formation, then it has to be in gross. So only in case if it is given in net domestic capital formation, then it will be a net domestic product at market price. Now yes, we have to derive to the national income, that is net national product at factor cost. So net, it's already net, domestic will convert to national in the second last step. The first thing is we will convert this market price to factor cost. So what we'll have to do to convert the market price to factor cost, we have to deduct net indirect taxes. So what is the value of net indirect taxes? 150. Here when it comes to the net indirect taxes, how do we get net indirect taxes? Net indirect taxes is equals to indirect tax minus subsidies. Sometimes they won't give you the net indirect taxes, rather they will give you the indirect tax and subsidies. So there what you will have to do is, to get the net indirect taxes, you will have to deduct subsidies from indirect taxes. When we deduct the net indirect taxes from the market price, we get the net domestic product at factor cost. So this is our domestic income. So the second last step is we have to convert this domestic income to the national income. So how do we convert the domestic income to national income? By adding net factor income from abroad. So what is the net factor income earned from abroad? It is 75. So since here it is positive, we have to add it. So finally we have find out the national income or net national product at factor cost. So this is how we find out the national income by using the 3 methods. Thank you for watching the video on calculation of national income.